Good evening, everybody. Nice to see you here. Thank you for sticking to the program. All right, we're almost at the end of the semester. Thanks for hanging in there. So this evening, I think everybody's been reading the announcements and knows what's on the menu, and that is the general ledger accounts from Learning Unit 6. So Learning Unit 6 is looking at manufacturing. Up until now, we've just looked at wholesalers who have been buying in stock of finished products, marking up on cost, selling price, and off we go. But now, for the first time, we are looking at a manufacturing business. So where there is a factory and we need to actually make the goods ourselves. So two things can happen. We can either be asked to prepare the accounts in the general ledger, or otherwise write up the statements as well as the notes. So I did load some resources today. Sorry, I'm just looking for the right thing. That's it. Yeah. So I've put up the Learning Unit 6 overview. I've also put up some questions for you to practice. Yeah. I also did put up some of the memos as well this morning. There's just the one outstanding from Learning Unit 5 with the EOQ. I suddenly realized that I couldn't find my memo, so I'm going to have to do another one, but that won't take me long. And then everything for Learning Unit 7 is all uploaded. So basically, it's just this that we're going to do this evening. And then we have one more topic left coming from Learning Unit 5. So we'll have a bit of a chat at the end of tonight's session, and we'll decide how we're going to tackle that Learning Unit 5 story. All right. So you can also refer to the recording that I put into the live lessons folder. It's another question on this topic. So there was a request actually from the other group, the supply chain students, who thought maybe they could get a bit of a step ahead because they are worried about this accounting thing. So they asked me if I had a recording that they could look at just to get them sort of up and running. Okay. So you can look at that one as well, together with this one, and then I'm sure everybody's going to be absolutely sorted with this section. So let me just show you here. This is a question out of the textbook. It's a bit small, but that was the best I could do with the photocopy. Let's look down here at the, oh wait, could I do this? Does this work? Oh, it does. All right, okay. Thanks, Adobe. That improves it a little bit. So we need to do ledger accounts. And I have specifically picked this question because it's the only one in the book that actually deals with all of the ledger accounts. So the book is rather bad, in fact, quite dreadful in tackling this topic. It does bits and pieces, but never actually puts it all together. So let's look at the worst case scenario. Maybe you would get a question with all of these, but I highly doubt that in the exam. They will ask some of them. There will not be enough time or marks to be able to answer all of them. So which combinations of them, I don't know which you're going to get, but if we at least do all of them, then you're going to have a good fighting chance. So what do we need to do? All right, down the bottom, direct material, direct labor, indirect material as well, work in process, finished goods, factory overheads, cost of sales, trading account, profit and loss. Right. So don't get put off with it and think, oh goodness, this is a disaster. We're going to take it slowly. Right. And my best advice to you here is this. Do not try to do one of the ledger accounts from start to finish and then go on to the next one and the next one. I say you open up T accounts for all of them at once. Okay. Then you're going to go to the information, and let me just show you over here. The dates are actually quite important. See if I can possibly make it even a bit bigger. Oh, wonderful. Right, so let's have a look here we've got balances beginning of May 2023. Then we have another lot. This is ended April, a year later, 2024. And then down the bottom, we have balances again, but at the end of 2024. So do take note of the dates, because what's going to happen here is these ones here are all going to be opening balances. These are the transactions that happen during the period. And then down at the bottom here, we have closing balances. So we are looking here at some things that are purely expenses. And in terms of accounting, expenses are nominal accounts. So they start with a zero balance at the beginning of the period. You keep debiting expenses as you incur them. Then at the end of the period, you close them off and they have a nil balance. Then you get other accounts which are assets. So those are things like materials, finished goods, etc., and indirect materials. You actually do have these items. So they will have a balance brought down, an opening balance. During the period, we might buy more of them and have other expenses related to them. We will use some of them in production, because remember, we're looking at manufacturing. At the end of the period, we will probably have some left. So those ones, like these at the top here, these four things are going to have opening balances. So what I'm going to suggest is that you open up all the T accounts, and the ones that have opening balances, go and put those in all at the same time. So I'm going to show you now how to do that. Because they're assets, remember the rule: to increase an asset, you write it on the debit side. To decrease an asset, on the credit side. So we're going to start by taking those first four opening balances in their respective accounts, and we're going to start by debiting them. Don't worry too much about the numbers. We're going to go to direct material, indirect material, finished goods, and work in process. Work in process we looked at last time when we did Learning Unit 7. It's unfinished goods. So let's take those four things. I'm going to show you here my answer. See, direct material, I've got an opening balance. Let's find another one. Work in process, there's my opening balance. Indirect material, opening balance. Finished goods, opening balance, and there won't be any others here. So make that step one. Get all of that sorted. Okay. Now we're going to come to the transactions that take place during the year. And my best advice is that you start at the top of the list and you work your way down. And as you come across an item, you go to the relevant account. That's why it helps that they're all open at once. As I said, don't try to do the one for direct materials and finish it. So just to make sure here that everybody is aware of this, here, raw materials there, and raw materials is another word for what? Direct materials. So direct materials and raw materials are the same thing. So don't let the wording put you off. So now let's have a look at these first two. We bought raw materials. It doesn't matter how we pay for it, whether it's cash or credit, it doesn't matter. Because if it's cash, we will use the bank account. If it's creditors, it will be creditors control. But those are not the manufacturing accounts that we are looking at. We are simply just looking at the materials. So let's see over here. We are going to have a purchase. So that means we're going to have more raw materials. So that means I'm going to write it on the debit side. Then we see something else to do with raw materials, and that is freight. Okay. That is also going to affect the cost of it. Right, so let me show you, how we're going to do that. Okay. Don't concentrate on the amounts. Let's just get the principle sorted. So I'm going to go to my direct materials account, and I'm going to debit it twice. Once with creditors control, and then again with creditors control. So have a look here. That was for the purchases, and that was for the freight. All right. Now, we're going to move on, and we're going to see indirect material. So have we got a T account for indirect material? Yes. Remember, it had the opening balance. Now we bought some more. So we're going to go and debit that one with creditors control. So let me tick it off the list. So we're going to come here. There's my indirect materials. That one I just spoke about there. We purchased more, so we're going to debit it with that amount. Now, please notice here how the marks get allocated. If you simply only put the amount, you're only going to be getting half marks every time. So you remember, you must put in the name of the other account. So you need to write something like here. That's why we must say creditors control. So we've done that one. We've ticked it off. Now we come to sales of finished products. So where is that one going to go? The sales of the finished products are going to land up in which account? Does anybody happen to know where the sales will go? The trading account. Because think about the trading account. That's where we say sales less cost of sales. We will work out our gross profit. So what we're going to do, let's take this sales of the finished products. And what we're going to do, see over here, we're going to come down. Sorry, there's a lot of scrolling going on. See here, in my trading account, let's just explain the trading account. Hopefully, we're going to be operating at a profit. So what we're going to do is we're going to put the sales, which is the income, on the credit side. Any income will increase the trading account on the credit side. Any expense or return will reduce the trading account on the debit side. Okay, so I'm going to come here to the trading account, and I'm going to put in those sales of the 696,480. And I'm just going to say, I don't know if anyone perhaps has got the textbook open in front of you. That might help. If you look a bit further down, we have got sales returns of finished products, 4,000. So that's why I've gone and I've minus the 4,000, giving me a total amount over here of the 692,480. So it's my sales less the sales returns. I'll show you here on the page. The sales was there, and this is the one I'm talking about. Sales returns of finished products. So I must put net sales. Okay, let's move on to another really easy one. Everyone will get 100% for this. Direct labor. So this is the same understanding of direct labor that we had when we did Learning Unit 4. Try to look at this actually together with Learning Unit 4, where we did product cost. Direct materials, direct labor, and factory overheads. Okay. So let's deal with direct labor. So this one is purely an expense. So all we're going to do is we are going to debit the direct labor account with these 4 items over here. Let me show you. Here's my direct labor account. On the debit side, I'm going to write those 4 things. So factory wages, pension fund, medical aid, and unemployment that are paid by the employer. So that is going to be the cost of the direct labor. That one is super easy. Everybody can get that right. So let's tick that lot off. Okay. Now, next one, indirect labor. Hopefully, you guys are remembering your Learning Unit 4. Think about factory overheads. So we have an account for direct materials. We have one for direct labor. But factory or manufacturing overheads consisted of the indirect material as well as the indirect labor. Those are the ones that people tend to forget. So what I'm also recommending here is that you go straight away before you forget in the exam and you go to the factory overheads account and you just write in the names of those things before you forget. So just go there and write indirect materials, indirect labor. So then, you leave the amount blank, just so that you don't forget. So now we've come across one of them. Here we've got indirect labor. Let me show you what I've done with it. I've come to my factory overheads, and there it is. See, I've got the 2 indirect ones sitting at the top of the list because I didn't want to forget them. So there's my indirect labor. Just remember why I'm writing on the debit side. It's because these are expenses. We always debit expenses. Then if we come here to the next lot, these: electricity, phone, insurance, and rent. What do we see happening there? They are split. Each one has a factory element as well as admin offices element. I just want to remind you here again, everyone, about Learning Unit 4. Product costs and period cost. Okay. So period costs consist of any admin cost as well as marketing, selling, or distribution. Right. So we are going to find that the period cost is not a production cost. That will go directly to profit and loss. However, the factory expenses must go in factory overheads, just like we did in Learning Unit 4. So let's have a look over here. We've got electricity for the factory. We've got phone for the factory, insurance and rent for the factory. So let's go and deal with those all at the same time because they all go to factory overheads. So here they are. There we go. Electricity, phone, insurance, and rent. Write their names there. Now, so as we don't forget, I want us to go straight away and we're going to go to the profit and loss account, which is down here. Just a reminder about the profit and loss. On the credit side is where we have the incomes, and on the debit side, we have any of the expenses. So notice what I've put here. I've put the electricity, the phone, the insurance, and the rent. Why those ones? Because those were for the office, and those are going to be examples of admin costs. Admin costs, remember, are period cost. That's why they go to profit and loss. Excuse me. Now let's go back to the question. So we've dealt with that, so we can tick off excuse me, I don't know, pardon for the cough. We've got that one, that, and that. Excuse me, sorry. Now, let's carry on. Selling and admin cost. As I've just said, that's going to be another example of a period cost. So some of it, the selling, is marketing, selling, distribution, and admin is just the admin cost. So where are we going to put that? Profit and loss. So let's go back there. That's that one. Keep ticking off. Next up, we're going to have stationery for the office and salaries of the admin staff. Once again, those are office cost. So they are period cost. Where are they going? Yes, you guessed it, profit and loss. So we're doing actually quite well with this one. There's stationery and there's salaries. Okay, because once again, these are also examples of the admin costs from above. Let's go back. It's looking quite good, isn't it? Not nearly as bad as you thought. Next up, we've got consumable stores. Just want to highlight something in here. That's quite important. It says indirect materials. And most importantly, it says issued to the factory. That means that they have been used. So they are now going to be a cost. So if you remember, we have to do the indirect materials T account. So what did we have with the indirect materials? We only had, here's one, this one, the opening inventory. Oh, sorry, I've landed up on highlighter. That's why it looks so gross. Indirect materials, opening inventory. There was something here. Yes, this one. There, we bought some. So we debited it. Now we are down here. Issued. So we've used it. So that means we're going to have less indirect materials. So I've got to write it on the other side of the T account because I'm going to reduce the amount. So let me show you what we're going to do in the indirect materials account. It's this one. Okay. I'm going to go and take that amount, that 9,000 Rand, and I'm going to put it over there. See, it's on the other side, and that means I'm going to reduce it. Okay. Then what comes next? Depreciation. Most importantly, it says on factory machinery, not office equipment, factory machinery. So like we learned in Learning Unit 4, what is that? That's a factory overhead. So let's tick it off. Let's go to factory overheads. And there's our final one over there, depreciation. Okay, carrying on. We have cost of sales of the finished products. So that's, I'm just going to leave just for the moment as the only one that's not ticked. So now we're at the stage where we have entered our transactions for the period, and we now need to start the process of closing off the accounts in the ledger. So how do we close off an account? We look at it and we see one side will always be bigger than the other. That's just your accounting. So you add up the bigger side and you put the total. Then you go on the other side and you put the same total, and you'll see that the other side does not add up to the same amount. So you're going to subtract and you're going to write in the difference on the side where it's short. And that will then allow you to start closing off those accounts. Okay. So we are going to do that now, and we're going to do it by using the closing balances. So let's look here at this, the raw materials. That's your direct materials. So at the end of the period, we have an amount of the raw materials of 6298. So I'm going to show you what we're going to do here. Okay. So just a reminder of the account. Opening balance. We bought more, so we debited it. We had the freight. It increased the cost, so we debited it. Okay. Now we're going to see we didn't have anything written on the other side except for this. That is my closing balance. And I'm going to take that amount straight out of the question. So I'm going to add up. I'm going to get the 58,000 on the debit side. Means I must put the 58 on the credit side as well. I'm going to subtract, and it's going to give me the 52. And now I have to close off that account. So it needs to go somewhere. So there is a very, very important account. We looked at it when we did job costing. The work in process account is the one where we continuously track and record all expenses as they happen. So we always take the direct material account and we close it to work in process. So that's why I need to come over here and I need to write work in process. Remember, I can't just have a number sitting without a description. So I'm busy closing off the account now. And I'll take direct material and I'm going to close it to work in process. So as soon as I've done that, I need to go to work in process, this account, and I'm going to put it over here. So I'm going to close my direct material account with that 52,000, closing it off to work in process. Okay. Then, before I forget, that closing balance over there becomes the opening balance for the next accounting period. So I write it down over there. That account is now totally finished. We can cross it off. Then I'm going to come to my next one, direct labor. Remember, this is just a nominal expense account. So we debit with expenses. We're going to take the four things, add them up. We're going to get 75. So I write 75 on the other side. Then I close it off, which means I write the 75 up there as well. And once again, direct labor is also going to be a cost, and it's going to get closed to work in process. So that's why I need to write work in process over there. Notice there's no balance carried down or brought down because it's only an expense account, not an asset. So before I forget, I go straight to work in process and I put the direct labor over there. Now what's happened? Finish this one. Next one, my factory overheads. It's yet another cost. So that's why we've only got these debit items on that side. And you notice here, I haven't explained this indirect material. This here is something of importance. That's why I left it for a bit. Let's go here. See here, this one. The indirect materials that were issued to the factory. That says that they were going to be used. So that's going to be my amount. That's going to go to the factory overheads. So not the opening balance, not the purchases, not the closing balance, but the amount that is used. So the issued to the factory 9,000, that's going to be what I take to the factory overheads. So that's then that one for indirect material. Now what I do is I add all of them up. I put the 106,000 on the debit side, also on that side. So now I need to close it. So I write the 106 there again. Where does this one also go? That's why I sort of changed the order of the questions so that we deal with the same things all at once. That also goes to work in process. So I'm going to go straight to work in process, factory overheads. So let me explain work in process again. Always start with your opening balance. Then you're going to close direct labor, direct material, and factory overheads, all to work in process. Okay. So now what's happened over here? Cross it off the list. It's finished. Now, let's deal with work in process. We started with a balance brought down of unfinished goods, because that's what work in process is. Now, during the period, we've used our labor, we've used the materials, and we've incurred factory overheads as we have been producing goods. So that's why our work in process has increased. So we're going to now come to the closing balances, and we see here, this one, unfinished goods on hand. I think I just need to type for you there. Unfinished goods in hand is another name for work in process. So that is the amount of the unfinished jobs that we've got left at the end of the period. So what am I going to do with it? Yep, you've guessed it. I'm going to write it up in the account over here. That is going to be my balance carried down. So that is my, let's just write it here. That's my closing balance, and that is my opening balance. So I put that in, and then I'm going to see that I have an amount missing. So I'm going to subtract the 26 from the 236. That gives me the 209. And now let's just use our brain and logic and think what that is. So I started the period with unfinished work. I then did work with labor. I used materials to do work. I had factory expenses to do work. I've now got so much work unfinished. So what has happened to the rest of the work that I've done? Very, very important. It must have changed from unfinished to finished. So work in process always gets closed off to finished goods. So unfinished goods become finished goods. So before I forget, what do? I take my closing balance and I put it down there to start the next period as the opening balance. But now, because we in the mind, we've just heard finished goods, what must I do? Go to the finished goods account and put that there on the other side. So here's my finished goods. All I had was my opening balance. Now I'm going to debit it again with what we just did, the work in process. Right, happy with that one? Now let's see what else I can do. I've got, let's see over here, finished products on hand. Most annoying, question mark, hasn't got the amount. So obviously we are going to have to find another way to find that one. But the one that I haven't dealt with as yet, if you can see, is this one here. the cost of sales of those finished products. So let's work our way through what we've got. Direct materials, finished. Direct labor, done. Factory overheads, done. Work in process, we've done. Oh, so yeah, let me just put it there, finished, because it's been closed to finished goods. Yeah. Now let's deal with this indirect material. Just a recap on it. I started with 2005-80. We bought some more on credit. We used some. That's why we put factory overheads. So now what we're going to do, we are going to balance it off. So I see my biggest side is 13,444. That's why I write that amount there. Something's missing. So I subtract the 9,000 from the 13, gives me the 4. So what must that then be? That must be the closing balance. So we write that there, closing balance, and then go straight away, put it as the opening balance for the next period. Indirect material is done. And remember that we closed it to factory overheads. We're completely done. Okay. Now let's have a look at the finished goods. If you remember, there was a question mark there. It didn't have the closing balance for the finished goods. But you see what I've got here. I've put a closing balance in there, but you're going to wonder how I got that. So I'm going to explain how we did that. All right. So if we come up here, there was that one nasty thing I said we hadn't looked at this year. The cost of sales of the finished products. So that is going to be the solution. So we're going to go to our finished goods account over here. And we're going to put that amount there. So let's see what's happened. I started with so many finished goods. During the period, I made more goods that became finished. That's this lot here. This is now saying cost of sales, which means they've been sold. So I don't have them anymore, do I? And if I don't have them, I need to reduce the value of my finished goods. That's why I write it on the other side. So I'm going to write in cost of sales of the 189. Now subtract that from the 220 and via the difference method over here. That is how we find the closing balance sometimes if we get stuck. Now what's happened? I have found that closing balance. So what do I do before we forget? Put it there as the opening balance for the next period. We're now done with finished goods. Cross it off. Before we forget, remember I had it over here. I credited there with cost of sales. So what must I do? Come to my cost of sales account and take that amount and put it here on the other side. Okay. So now what have we got? Cost of sales. I've only got my one entry there of my finished goods. So what am I going to do? I need to close this one off. So your cost of sales account is very short and sweet. All we're going to do is we're going to have on the debit side finished goods. We're going to balance it off and we're going to close it to the trading account. That one is now done. We're getting towards the end of it. Okay. So I'm going to come to my trading account. If you remember right from the very beginning, we did the sales. So sales is the income. That's why it's on the credit side. We're now going to reduce it by the cost of sales. And where's that coming from? There. Oh, it won't let me. hop over the page there. So now I'm going to debit the trading account with the cost of sales. Almost done. I'm going to tally up both sides. Obviously, the credit side will always be bigger. So we're going to put the 692, write the 692 on the other side. Realize we're short, find the difference. So subtract the 189, and it gives us the amount of 503. And what do we call it when we have more sales than cost of sales? Yes, that's going to be gross profit. So that's what I do over here. I'm going to say GP, because remember I always need to write something there. And where does GP go to? Here, profit and loss. This account I can tick off. It's finished. One last thing to do. I need to take my gross profit and I need to credit the profit and loss with that. So here it is. See over there, let's try and get it there. Yep, that amount, I'm going to credit the profit and loss account with my GP. All the things on the other side were already done. So I'm going to pick the bigger side, which is always the credit side of the 503, which is my gross profit. Remember now, gross profit, subtract any other expenses, gives me what? Net profit over here. And where does net profit get closed off to? The capital account. And obviously, we're not doing the capital account. So just to explain, we need to find up to 503. I'm going to add up all of these period costs here. I'm going to subtract from 503 gives me the 371. And obviously, that means I have a profit. So you write there net profit, close it off to the capital account, and we are what? Done. Finished. All accounts opened, closed, finished off. Right, so this is a whopper of a question. I do understand if anyone is getting a little bit anxious, but it's the most comprehensive kind of question that there is. The chances of you getting asked all of them in the exam, not going to happen, but I can guarantee that there will always be some. You would have to do, as a minimum, direct material, direct labor, factory overheads. Definitely those three. You might or you might not get indirect material. You will have to do work in process and finished goods. Perhaps if it is a mark, if it's a question that carries more marks, sorry, you will then have to do some of the others. Profit and loss, possibly, possibly not. So that's an indefinite one. Indirect material, also, yes or no. Cost of sales, yes or no. And trading accounts, possibly, yes, possibly not. So what they could do is not ask you to do the trading account, but they can tell you what the balance is and then ask you to do profit and loss. So if they do that, then there's no reason why you need to do the trading account. You will simply use the value that they give and you will put it on the credit side of profit and loss. And then you'll just complete that. So there we have it. There's lots of questions in the book that you could practice, but I picked this one simply because it's the most thorough one. So what else can you do? Okay. Definitely my, we need the caps, revision exercises. I've put them there today, 1 and 2. Please, 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 please do these ones as practice. You will be doing yourself the best favor possible for the exam. So lots from me to help you with this miserable section. Okay. This recording, together with the other one that's already there in the live lessons folder, that's another practice one. Go and do, as a minimum, these two. Then you're sorted for the question in the exam coming from this. So that was actually excellent timing because my light has just gone off. Sitting in the almost complete darkness here, no sign of the power coming back on. So that was perfect timing. Right, so I'm going to stop sharing, come back here, and see how we have got on. Oh, I see. Good. Yeah, some other people have joined. Bocciamelo, hello. Natasha as well. Hi there. Sorry, you must have come in just a second or two after I started to share the screen, and then I didn't see you. Danisha, yes, I did greet you. So, how are we? Do you think if you sat and you persevered with this one, you would come right? So I think the people, yeah, Laura, Victor, the ones who've done accounting, it should start coming back. Yes, Danisha's liking the look of it as well. Please, I go down on bended knee, Natasha as well. Learn this for the exam. It's definitely coming up. Practice the questions. Set for the Learning Unit 6. I've also put up a question coming from the other part of this, which is the production cost statement, trading statement, and the accompanying notes. You can try it if you like, not to try and smash if you don't, but you must do these ledger accounts. Any questions from anybody just before I wrap up the recording?
I was just wondering, Miss, on what we're going to be doing for the exam revision, you know, once that time comes when we're done with syllabus and things. Just wondering.
Okay, so that's what I wanted to have a chat about when we stop the recording.
Okay, thanks.
We're going to make a plan, yes. So that will determine what we do next week. Okay, don't worry, I'm not leaving you out in the lurch. You are going to be 500% prepared for the exam. Don't worry, don't worry. Okay, but thanks just for asking. Anything else from anybody? Nope, I think so. Let me just call it a night with the recording, and then we'll chat. So thanks, guys, everybody, for sticking it out. This has been quite a long, intense session, but listen to the recording, maybe take it in bite-sized little bits, one account at a time. But it's going to pay you back well in the exam. Right, so I'm going to stop everything. For the moment, this recording is done.